And welcome to IPB Live, episode number 8. And today is all about 1035 exchanges. I know that you've all been waiting anxiously on the edge of your seat for us to talk about 1035 exchanges. And today we're going to deliver. But first, our shameless promotion section of the IPB Live streamcast thingy. If this is all working, then right below me in the bottom of the window, you'll see ipblive.com. If you go over there, you can check out our book, Predictable Profits, which is a prop. And if I actually had it where it was supposed to be, it'd be right here. You can learn.
That would have been so excellent if you had fallen over just now.
It probably would have been the most entertaining part of this of this live. If you'll go over to ipblive.com, you can learn all about predictable profits, the 5 reasons your clients actually want to buy whole life insurance. All right, but today we're going to talk about 1035 exchanges, Brandon. What say you?
What say I? I say that the 1035 exchange, this is really just an introductory thing for it, or introduction to the 1035 exchange. It is most commonly known as a tax-free transfer of cash values from one insurance contract to another insurance contract. And to understand the significance of that, let's kind of back up and do just a little refresher on the tax applications of the 1035 exchange or life insurance in general. We all know that life insurance cash values accumulate tax deferred. However, if you remove the cash from the life insurance policy, it does have a non-taxable basis. That's the contributions that you made, premiums that you paid to the policy.
Right.
And then any gain in cash value beyond what you physically put in premium is now taxable income to the policyholder. Mm-hmm. So if the policy were surrendered or if the cash value were extracted from the policy, any portion of gain would be recognized by the policyholder as income, and income taxes would be due on that amount.
Right.
So as you might imagine, that places a fairly significant disincentive on policyholders to change one old policy with a lot of cash value buildup in it over to another policy. Because if there were no 1035 exchange provision, that person would have to cancel the old contract, pay taxes on the income recognized, and then move the money to the new policy. But the 1035 exchange is instead a provision that we have that allows cash values to transfer from one policy to another without recognizing that distribution and therefore not paying taxes on that gain.
Right. So that's really good news for people who feel like they may be stuck in an old policy that's not performing very well. That's probably not so good a news for life insurance companies that would like for people to never move their policies and just continue to pay the premium.
Well, there's always going to be a little bit of that. But there will always be a reason for someone at some point to perhaps take a look at something different. Things change. Objectives change.
That's actually contrary to most of our training as life insurance agents, right? I mean, at least when I was coming along in the beginning, there was sort of this, I guess it's an unwritten rule or something like that, that basically people should always just keep the policy they have. I mean, that was kind of the, to be very, what's the way to put it? To be very cautious about suggesting that anyone exchange or replace a policy or anything like that. And certainly everyone should be prudent and never make those recommendations unless they're clear, right? But
yes, that is correct. A couple of specific rules about the 1035 exchange in terms of how contracts can shift, because we've mentioned life insurance, but you should understand that the 1035 exchange affects all life insurance contracts. And when I say all life insurance contracts, there's a bit of nuance to that may be unclear to people. So within the number of or within the world of life insurance contracts, that encompasses things like whole life universal life insurance. It also encompasses endowment contracts, which we don't talk about much these days because tax laws that changed in the 80s basically rendered them non-achievable.
Right.
And it includes annuity contracts. So the 1035 exchange can be used to move money from life insurance contracts, from endowment contracts, and from annuity contracts. But there's a specific order that everything has to follow. And that order is easily or most easily thought about in terms of sort of a hierarchy where life insurance is on top, endowment contracts are in the middle, and annuities are on the bottom. And you can always transfer from one contract to another, and you can move down that hierarchy, but you can't move up that hierarchy. So what I mean by that is you can move cash values in a life insurance contract to an endowment contract if they still existed, and to annuity contracts, but you cannot move you cannot move annuity values into an endowment contract or a life insurance contract. That's not allowed for the 1035 exchange.
Okay. Yeah. I was going to say, as a 1035 exchange, of course you can surrender those, pay the taxes, move the money, but as a 1035 exchange, what you're saying is there's a definite hierarchy of how things are allowed.
So you can always move like to like, and then you can kind of move down that hierarchy. So life insurance to life insurance to endowment contracts, life insurance to annuities, or endowment contracts to endowment contracts if they still existed, and endowment contracts to annuities, or annuities to annuities, but you cannot move in reverse.
Right. Well, and I'm glad you brought up the annuities, because a lot of us, those of us in the industry know this, but a lot of people don't realize that annuities are life insurance products. They just forget. They just forget that they are.
But it's worth noting that you can move money from an annuity contract to a new annuity contract without having to recognize the gain in paying taxes on that.
Right. Absolutely.
There are some additional tax aspects of the 1035 exchange. When you transfer through 1035 exchange, you are moving both the cash value and the cost basis from the old contract to the new contract.
Right.
So what that means is you are taking whatever you paid as premiums credited to that current contract, and you are automatically have that with the new contract. So if you have a cost basis of $50,000 in a life insurance policy, and you move that life insurance policy to an annuity contract, you already have a $50,000 cost basis in that annuity contract.
Right. Absolutely. All right. So can you talk a little bit about procedurally? I may be going out of order here because I'm not looking down at my notes because I'm trying to look at the camera. So can you talk a little bit procedurally about, we talked about the hierarchy, but then understanding that there's a definite way to make this work. In other words, you don't just call up, surrender the contract, then call the new company and go, I want to buy a policy with a 1035 exchange.
Correct. There is an official procedure that is in place. To do a very quick overview of it, it basically involves some additional paperwork and a process where life insurance values are transferred from one company to another. I do believe, however, that for an in-depth sort of discussion about that process would be better served as a standalone broadcast. So stay tuned for that, so to speak. But I do think that it might serve listeners well to sort of go through a little bit of some examples about why and how we would use 1035 exchanges.
Absolutely.
So, for example, one common case where 1035 exchanges get used are somebody who buys a life insurance policy, perhaps whole life or universal life insurance, and they discover that what they ended up purchasing was not really conducive to what they wanted to do. So 9 times out of 10, this would be a circumstance where somebody decided, I want to accumulate cash value inside life insurance for its various benefits. That could be retirement income. It could be tax efficiency. It could be the ability to withdraw funds or distribute funds at an age earlier than is allowed on IRAs or 401ks or things such as that. So in those circumstances, we want a life insurance policy that is optimized for the purpose of cash accumulation. Instead, I end up with something that it turns out is not optimized for that purpose. So I'd like to transfer to a new policy, but I did make some premium payments and I'm going to walk away from this thing at a loss. So it sure would be nice to at least carry the cost basis that I had contributed to this old policy to the new policy. The 1035 exchange allows that to happen.
Right. Exactly. And that cost basis, I don't know that we've got, I mean, maybe you can just talk for a couple seconds about why the cost basis is important down the road. Because it's usually not important in the short term, right?
Sure. No, but one case may be, we've often used life insurance distributions as a withdrawal to basis, and then loans on gain, so that we don't pay income taxes on that. And so
Right.
the larger the basis, the more withdrawal we get to take. So if we get to transfer credits basically that were paid to an old underperforming policy to a new one that will perform much better, that will give us a little more money that we can withdraw should we want to, and not owe any taxes on that, because we're taking a FIFO distribution from the policy. Another possible benefit of carrying over the cost basis is a circumstance where we move cash values from a bona fide life insurance policy over to an annuity, and we choose to annuitize the contract. If we choose to annuitize, we get to use the exclusion ratio to make a portion of the income created by the annuity non-taxable, and a larger basis will make a larger percentage of that payment non-taxable to us.
Right. Your exclusion ratio will be increased because of that cost basis.
Correct.
Yeah, that's something that was, my understanding is that was something that was much more common even before I got into the industry. That was very common for people decades ago to buy a permanent life insurance policy, a whole life insurance policy, because decades ago that's all there was. But in terms of permanent life insurance, and then at retirement, whatever that magical age was for them, to convert that to an annuity or exchange it to an annuity. And receive income distributions from a single premium immediate annuity, depending on how they wanted the money paid out.
Yeah. One last note on this. The carrying of cost basis is a fairly substantial benefit to the 1035 exchange, but it can only happen if there's actually cash value in the old contract. So if, for example, you buy a whole life policy that's standard whole life and it doesn't have any cash value in the first year, sometimes two.
Right.
And you decide, this isn't what I wanted, I should have bought something different, so I would like to cancel this contract and buy a new one, but I'd like to preserve my cost basis. Unfortunately, if there is still zero cash value in the old whole life policy, there is no 1035 exchange permissible. So there's no ability to transfer that old cost basis.
It's got to have $1.
Yep.
So to speak.
Got to have $1, then you got to deal with everyone asking why you transfer $1, but there is a reason.
Right. Then you can go through the 6-month process of waiting. Were you planning on getting into, did you want to discuss at all the procedural issues, or we want to do a separate talk on that at some point in the future?
I think it's better to do that separately. We'll do that under its own heading for this purpose, because it'll better organize things for us and for everyone out there.
Right. Well, anything else you seem to be having some technical difficulties? Anything else you want to add today, or?
Nope. I think we're good.
Okay. All right. Well, thanks for tuning in today to the IPB live stream. I really got to come up with a better name for this. Originally, we were doing all these on Facebook Live. We are now putting them up on YouTube as well. So after the fact, sometimes there's a little bit of a delay, but they'll all be cataloged there on YouTube as well. Don't forget to go over to ipblive.com if you want to learn more about predictable profits and all of the awesome bonuses that we're going to give you there. Until tomorrow, make it a great day.